Hello and a warm welcome from Frankfurt, a warm welcome indeed given the temperatures outside. My name is Thomas Kors, I'm in charge for financial institutions at Helaba. I have with me Matthias Melms, who is the man looking at syndicate and DCM, and this is the quarterly review and outlook for the primary markets in covered, senior unsecured and SSA. Actually, today we're not doing a quarterly, we're doing a semi-annually one because the last quarter wasn't too exciting when it comes to bond issues. We only had 30 billion in the whole of July as compared to almost 460 billion for the whole of the first year. But nevertheless, a lot of things happened, mostly in the political side of things and in the markets. We had a rapid increase of inflationary data and inflationary projections. We had a complete reverse of interest rate policy also in the Eurozone, not just in the area that the Fed is taking care of. And last but not least, we had a pretty tremendous increase of the value of the dollar versus other currencies. Hope to stress it's not just against the euro, but pretty much against all the currencies that there are. In covereds, we had a couple of things going on. The CBD was implemented, that's the covered bond directive, on the 8th of July. The central bank has, in line with their change of interest policy, also changed their tack when it comes to new issues. And this is where Matthias is going to start. Matthias, looking back at the last half year in covereds, what were the major factors driving the markets? I just mentioned one, the ECB. What else is there and what did the ECB do?
Yeah, thanks, Thomas. First of all, I have to mention that we have seen the best first half year for covered bonds for at least 10 years, with an issuing volume of 123 billion. We have seen so much issuance activity we haven't seen for really a decade, and that has specific reasons. First of all, Thomas mentioned the implementation of the CBD in the European law on the 8th of July, which has some effects on the markets. So a lot of issuers wanted to be in the market to issue before the implementation without knowing if they get a new issuance permission by their local central bank after the implementation. And you can see this effect in May with an issuance volume of roughly 25 billion. We have seen the highest issuance volume in May for roughly about 5 years.
And we had some jurisdictions that were pretty active that have never been as active before, right?
Exactly. With Canadian covered bond issuers having issued roughly 23 billion year to date, they were as active as they were never been before in the euro market, and they have made heavily use of the access of covered bonds to a market in a period, especially in March, where the market was more or less locked for senior issuance. So, but not only the Canadians have taken advantage from this favorable market condition, but also other jurisdictions.
As for example, our alpine neighbors in the south?
Exactly. Our friends from Austria have issued so far 11 billion euros in covered bond, a benchmark format, and this is also the highest issuance volume we have observed in the last years from Austria. The reason is here the same as we mentioned before, CBD, with the reform of the Austrian covered bond law. Austrian issuers wanted to be in the market before the implementation of the CBD.
And all that results also in the adjustment for the future. We had 135 billion in total volume projections. You're now increasing that significantly, I see.
Exactly. We see now 150 billion this year. That would also translate in the highest issuance volume for over a decade, meaning that we see another around 30 billion coming to the markets after the summer break.
Wow, so it's the year of covered bonds. I think we can agree on that.
Exactly.
Have waited for that for a long time. So, but apart from covereds, what about the senior sector?
Yeah, it's the year of the covered. It's not the year of the senior, at least not the year of the senior pref.
Only for volumes, not for quality.
With roughly 40 billions, we are more or less in line what we have observed in the last years. It is, I think, worth mentioning that especially the Spanish issuers have issued roughly 10 billion out of this 40 billion this year, as they weren't active in covered bonds heavily. So with the reform of the Spanish covered bond law, Spanish issuers have focused this year more on especially senior pref. So, and for the full year, we expect another 20 billion that should go to the market, but no further surprise here.
So all calm on that front. What about senior non-pref?
In senior non-pref, we have seen the most active year for the last 5 years. Saying that, you also see that the activity is just a little bit more than it was in the years before. So the overall topic here is, again, as it was in the last 5 years, MREL issuance. So with this higher activity that we expected at the beginning for the year, it is also necessary to adjust a little bit our forecast to now 85 billion for the full year.
So adding that together, that's still less than we expect for coverts.
It's the year of the coverts.
Cool. Let's talk about another golden child of the last few years, the SSA sector.
Yeah, you mentioned it full correctly. The golden child of the last year is not the golden child of this year. As you can see, the issuance volume is down from roughly 300 billion to a little bit more than 200 billion year to date. The reason for that is relatively simple to explain. The EU hasn't issued as much as they had issued the years before. Point one. And the other factor is that we have seen much higher tax income for the German lenders than the years before, translate in issuance activity of just a little bit more than 20 billion compared to 40 and 50 billion the years before.
That's the federal states, the Bundesländer that you're talking about. Who would have thought a few years ago that these would become rare commodities? But they are, so all of the issues that we've seen really, well, almost all went really well. Exactly. And I guess that's a good omen for the future.
Exactly.
So in that respect, thank you very much for the review. What about looking forward for H2? I guess we have a list of pretty much the same things that we had in the past. Maybe a couple of changes here, if you want to allude to the new ones, maybe?
Yeah. You see the topics and the volatility drivers that we see for the second half of the year are the same that we have expected so far, with one differentiation. At least due to the latest development in Taiwan, we could expect that we get higher volatility coming from the China topic, and that could translate in a more or less turbulent second half of the year. And we have another political factor that is new after resign of the Italian government. We get snap election in September with an uncertain outcome. So that could also lead to higher volatility, especially in the Eurozone.
Funny you should call that new, because political crisis in Italy sounds like an ever-repeating story.
Yeah.
Anyway, but there's one missing here. What about the pandemic? Is that not relevant anymore?
Yeah, the pandemic is not over, but it is more or less over the financial markets. We don't see any occurrence of new data that could influence issuance activity and could lead to higher volatility.
Okay, fair enough. At least good hope that we'll not be negatively surprised by that. So thank you very much, Matthias, for the wonderful review and the valid outlook. I have one thing to mention before I say goodbye to you. That is, Helaba is honored to have been nominated for 2 award categories in the Global Covered Bond Awards 2022. One is for the best Euro covered deal. That was our Helaba dual tranche in February. And the other one is best bank for distribution. So if you like what you see here, if you like our bank and what we do, it would be great if you would cast your vote to one or even both of these categories in our favor. The link will be on this video. And this is why I say thank you very much, Matthias. Thank you very much in the audience. My name is Thomas Kors. I work for Helaba. So does he. And we hope to see you soon back again in this format. Bye-bye.